Hello everyone, today we will discuss another topic in banking insurance law. Today's topic is default and recovery. We will discuss the concept of default in a loan and recovery of loan payment in banking. The list of topics to be covered here is meaning of default, then certain causes of default, what is the concept of non-performing assets (NPS). Then we'll discuss the meaning of recovery, different processes of recovery used by banking industry, banks and financial institutions. Then what are the debt recovery laws in India. Meaning of default. Default is the failure to repay a debt, including interest or principal, on a loan or security. A default can occur when a borrower is unable to make timely payments, misses payments, or avoids or stops making payments. Individuals, businesses, and even countries can fall prey to default if they cannot keep up their debt obligations. Default risks are often calculated well in advance by creditors. Causes of default. After surveying different banks, the following can be said to be some of the main causes of default of loans from industrial sector. First is improper selection of an entrepreneur. The creditworthiness of the entrepreneur as well as the project should undergo very careful scrutiny before the sanctioning of the loan. Strict measures and scrutiny should take before the sanctioning of the loan. Next is deficient analysis of project viability. One of the important reasons for poor recovery of loan is attributable to wrong selection of projects. Success of any project depends upon the viability of the project, and the viability in turn depends upon the easy availability of raw material, transport, railways, skilled labor, communication facilities, market, etc. If any of the above is not easily available to the entrepreneur, it results in an increase in the cost of the project and also in delay of production, which ultimately causing default in repayment of the loan. Next is inadequacy of collateral security, equitable mortgage against a loan. Collateral security by way of mortgage of immovable property or other fixed assets, thereby creating a charge, trains the mind of the borrower to be prepared to pay the due to the lenders. Security against loan, though at times may fall harsh on the borrower, serves a worthwhile purpose in that it creates promoters' stakes in the borrower and thus disciplines the borrower to be more committed in paying the dues to the bank. Next is unrealistic terms and schedule of repayment. Many times the borrower just agrees to the terms and conditions of loan, but the real problem surfaces when repayment of installment or payment of interest falls due and the borrower conveniently and blissfully ignores the call for clearances of said dues, not so much due to his intention to defraud the loans, but due to unrealistic circumstances and possible harsh life events. Lack of follow-up measures. Follow-up measures taken regularly and systematically keep the borrowing unit under constant vigil of the banks. Inspections prevent the borrowers from deviating from the terms and conditions of the loan and from diverting any fund for purpose other than those earmarked in the sanction letter and keep the financial health of the units in a good order. Default due to natural calamities. A certain proportion of default can be attributed to natural calamities such as floods, earthquakes, storm, etc. Prima facie, this would be seen to be a factor beyond human control. Sometimes, borrowers who tend to take undue advantage of such natural calamities in order to avoid repayment, thereby increasing the magnitude of default. The concept of NPAs. NPA is non-performing assets. An asset is classified as a non-performing asset if dues in the form of the principal and interest are not paid by the borrower for a period of 90 days. If any advance or credit facilities granted by a bank to a borrower become non-performing, then the bank will have to treat all the advances, credit facilities granted to that borrower as non-performing without having any regard to the fact that there may still exist certain advances credit facilities having performing status. Meaning of recovery. Recovery is defined as the process of regaining and saving something lost or in danger of becoming cost. Recovery is the key to the stability of the banking sector. There should be no hesitation in stating that Indian banks have done a remarkable job in containment of NPA, non-performing assets, considering the overall difficult environment. Different processes of recovery. Debt recovery processes can be typically of following kinds, each involving different procedure. There are three types of recovery process. First is difficult recovery process. Second is assets possession process. Third is legal recovery process. Difficult recovery process, where the debtors are not willing to pay and who intentionally resist or avoid recovery efforts. The recovery agent has to follow special process of recovery against the disobedient defaulters in consultation with the bank. Assets possessions process. If the disobedient debtor do not eventually pay the dues, the movable assets charged to the bank by way of hypothecation or pledge can be possessed by the bank or the recovery agent and thereafter auctioned or otherwise sold to recover the dues. Legal recovery process. Under this, the intervention of the court is required to possess mortgage immovable property by the recovery agent. Also, if the charged assets do not exist or the debt is unsecured, the debtor will have to be sued for recovery of the dues by the bank or recovery agent. Here are certain debt recovery laws in India. Recovery of Debts Due to Banks and Financial Institutions Act 1993 is an act to provide for the establishment of tribunals for expeditious adjudication and recovery of debt due to banks and financial institutions and for matters connected therewith and incidental thereto. Debt Recovery Tribunals. The Debt Recovery Tribunals DRTs and Debt Recovery Appellate Tribunals DRATs were established under the Recovery of Debts Due to Banks and Financial Institutions Act 1993 with the specific objective of providing expeditious adjudication and recovery of debts due to banks and financial institutions.